All right, everybody, welcome back to the Exploring the Blockchain podcast, where we document our experiences of learning about the blockchain, interview guests and experts in the space, and keep you updated on the latest trends in the industry. I'm your co-host, Zane.
And I'm Josh. Today we're joined by Lili, who's going to discuss investing in Web3 and funding blockchain startups. Thank you so much for joining us today. Can you start by telling us a little bit about your background and what brought you into the Web3 space?
Yeah, my background is mostly TradFi. Did my time on trading floors and banking floors and private equity and hedge fund floors. Did the whole circuit on Wall Street with Goldman Sachs and various hedge funds in New York. And I think that got very interested in crypto quite early, but was always more of a casual trading and just buying and hold type of thing. And realized very quickly as I decided to go more aggressive into the space and to trade more actively that I am terrible at it. And essentially losing out on every trade, pretty much at a disadvantage. And I think a lot of retail traders and investors probably feel similarly, especially when you're new to the space, right? You hear, and at that time it's very early tokens, but it's like even with Bitcoin, trading on Bitcoin and trying to do it intelligently, and you can be very proficient at TA, but just having a market that doesn't close was something of a challenge. Um, and so kind of found QIS as a desperate attempt to make myself better at investing in the space. In that, in traditional finance, information asymmetry is your data. It's your advantage. If you have more data, more info than the next guy, then you're probably going to win out. Whereas in crypto, it's information overwhelm, right? It's everything is on chain. Price action is transparent. Exchange information, block information, wallet information. There's so much data, not to mention news and crypto Twitter and Discord. There's just a lot of information that is now available. So it's not about access to information, but about making sense of the information and finding alpha. The TLDR is QIS, quantitative investment strategies. We use machine learning to process a ton of data from a ton of different resources. And then our research team basically takes the things that we find and make them into quantitative signals so that we can industrialize the trading process and we can remove human emotions and bias and all the other factors that make us inefficient traders in the space, and actually create a system that allows us all to sleep, frankly, and know that the book is being taken care of. So that's how QIS came into being.
Cool. So, curious a little bit more about, how you choose what to invest in, what type of indicators you guys look for. Is it primarily like technical indicators? Do you take into account, user sentiment? And what exactly are you funding? Are you funding blockchain startups, or are you funding specific crypto? What exactly is it that you guys do, and what type of factors do you look at?
Yeah, so part of the QIS journey, we only look at liquid tokens, but part of that journey was saying to ourselves, well, because crypto becomes liquid very quickly, right? So in traditional Silicon Valley startups, in Web 2, when you invest in a company, it takes years for them to build into their product. A lot of times, finding product market fit itself will take years. And then there'll be pivots, and then there'll be turnovers, and then there'll be growing pains. And then, they get to a point where they IPO or they get purchased. And then at that point is where the liquidity comes for the investor. But with crypto, typical, from seed funding to liquidity, it could be as fast as 6 months, 12 months. And so a lot of that really speed runs that process, which is at that point we said to ourselves, look, we really need to understand these things from the very early stages, which is how Castle Seal came into being. It's a prop fund. It's just our own money. There's no outside capital, but it's essentially a group of, it's a core group, but we also work together with a larger ecosystem of developers, of investors, of just crypto enthusiasts, crypto OGs to essentially um, vet, due diligence, advise startups in this space.
So Castle Seals, you primarily invest in startups, and then QIS is just the liquid tokens. That's the sort of distinction between the two.
Correct, correct. Yeah. And I think one really helps to inform the other. Um, and then back to the point about how we look for how we actually trade, like the tokens that we trade, there's definitely liquidity requirements. But we process over 100 gigs of data a day, and we look at level one, level two data, exchange data. We look at on-chain data. We look at sentiment data, all of crypto Twitter data. We use natural language processing to try to make sense of it. And so it's a lot. And then we don't do a lot of market neutral stuff. We mostly use AI and quantitative strategies to do predictive momentum trading, um, because it's like market neutral, you'll do okay. But crypto, like if you really want the massive upsides, we actually believe what you should be gunning for is um, outperforming the market when it's up on a risk adjusted basis, and then losing less money when the market's down. And if you can do that enough, you're going to win out, right? So it's a different approach to quant, because I know most quants. I don't know how many funds you've had on your podcast, but a lot of quants do market making, risk arb, more neutral strategies. We actually think it's worth it. It's worth doing the work to do actual predictive algorithms.
Great. Going back to QIS, um, what advice would you have to, someone getting into crypto trading? Any analytics they should look at, analysis that they should understand when first getting into that?
I mean, I think definitely getting a trading view account, Glassnode account, those kind of things are very helpful. Um, Even just making sure that you're subscribing to the proper newsletters. I would, like explore the Nansen universe, Masari. There's a lot of very helpful resources. But crypto is a different animal from, I would say, traditional equities or bonds, in that crypto is very, very momentum driven, right? And so, I would say that understanding how the technical analysis actually function within crypto is very important, because I'll give you an example. Like if you're a TA trader and you're looking at Bollinger Bands and you're assuming a mean reversion, a lot of times when you're on the upper bound, you're like, oh my gosh, it's going to come right back down. This is a sell signal. But we find that in crypto, a lot of times when things actually hit the upper bound, it actually is a momentum indicator and it's about to rip even higher. And so understanding how those dynamics function idiosyncratically to crypto is very important.
Yeah, and I think what's unique about your perspective is you mentioned that you come from more traditional finance and now you're in this sort of new world. So I guess I'm curious, like, what have you seen what kind of differences have you seen? You come from PE. What is the difference in operating sort of this traditional quantitative firm or this private equity firm to this new, totally different world? And when you're doing things like QIS and yeah, what are the differences you've seen?
I mean, I used to look at emerging market equities, and I used to look at it on an event-driven basis, and I find that the catalyst for market action in crypto is very different. First of all, there's no such thing as fundamentals, right? A lot of the DeFi projects, it's essentially issuing dividends, stocks as dividends, and using emissions on a contango basis to create those APY. None of that's sustainable. But a lot of times you go in and you're just like, wow, this doesn't make any sense. And the whole universe is telling you, yeah, you're just not native enough. And I think this cycle is is actually pretty interesting, because a lot of times just like, no, I wasn't crazy. Human nature didn't fundamentally change, right? Like hope, greed, and fear are still the primary driving factors. Um, but what's really different, is how extremely reflexive crypto is. I guess I wouldn't say different, it is magnified in terms of whether it's narrative or whether it's price momentum. Like people find ways to justify anything. And it's about creating, you hear the word flywheel a lot, you hear the word death spiral a lot, right? It's so heavily sentiment and momentum driven that common sense usually just goes out the window. um, and the cult of personality, the worshipful cultish behavior within crypto, the massive reflexivity within crypto, the insane amount of momentum. um, I think it's it's appropriate in that it's a new market. It's very innovative. You see people become, whenever there's innovation, there's going to be speculation. I get it. Um, but as people new to the space, I think it's definitely good to be aware of those dynamics.
Yeah, I totally agree. Do you think like the flywheel effect and like this complete crazy movements to the upside or downside will change if we receive like a mass adoption and more development when we see stabilization, or do you think it'll always be a volatile asset?
I mean, I'm gonna say something that's probably gonna get me crucified or get a lot of hate mail for you guys, but um, let me ask you, like, do you think people would have fun in investing in the stock market if Amazon owned the Nasdaq, owned Goldman Sachs, owned Citadel, owned also all the marketing firms and Sand Hill Road? Do you think that people would feel safe investing in stocks if it's a near monopoly with a complete insider trading dynamic?
No, no, yeah, probably not.
How would that make you feel? Zane's like, yeah, that's like insane, right? But that's what we have in crypto right now. So until like I'm all for regulation in that, for instance, first of all, Wall Street can't really touch the stuff in size until the market cap of the ecosystem expands. And we can't do that until there's regulation because the SEC, like, we don't know what's a security or what's a commodity. And without understanding what the underlying assets are, you're not going to see the Goldmans and the JPs come in size. That's one. And two, and nobody's talking about this, if it's a complete insider market, right? How would that work? How does that work for your average retail investor? How would that work for your pensions and endowments and family offices? How would that work? It's like you're either with the program or you're not, and you then have different mafia effect. So it's like the rent extraction from front running, from insider trading, from VC transfers, from, just listing the whole listing fee transaction process. Like, how would that make it safe for investors to come in? So that's another dynamic that I would caution for people that are getting into the ecosystem.
Do you have any thoughts on regulation? I mean, this is a crazy question. I mean, like this is a pretty broad question, but do you have any thoughts on regulation and like where to draw the line
Yeah.
between letting the sort of blockchain free market roam and where we should put some laws in place and have some centralization?
Like if the NASDAQ owned a big hedge fund and the market makers and the deal makers and all the marketing, like like it's an obvious no-no, right? So why is nobody just saying anything when FTX owns everything, right? Or Binance, or like it's a land grab of having absolute monopolistic control. And I feel like until that problem is solved, it doesn't matter what's an equity, what's a security, what's a commodity. So, like and I think that this is something that's just like generally accepted in crypto. Oh, like it's insider or whatever. It's just like, but in the real world, and I know we're all trying to reinvent finance, but rules are there for a reason to give people a fair shot, right? So, yeah, there's billions of dollars in lobbying money and there's bigger problems in the world. I get that, but I don't understand how institutional adoption really works if the only people that can play and for all new entrants, your survival and how much money you make is essentially controlled by a handful of big firms.
Yeah, I think that's really interesting because that's one of the main reasons why people get into crypto. It's like it's decentralized. Nobody owns it all. But in a way, like different VCs, different huge companies are the ones owning it all, even worse than our current financial system. That's just a side tangent. But anyways, um, we know like the laws are like kind of behind in the crypto space and that'll take a couple of years to all get done. Is the technology um like we hear the word metaverse all the time. We hear how blockchain technology is changing everything. Is the actual technology behind the hype there? Financial payments are kind of starting. Um, Different games we'll start to see. But a lot of these projects, they'll promise the world. And they'll say, by 2025, we'll have whatever done. Like, are any of these companies or projects, like, actually gonna get these things done that they promise?
That's a lot to unpack. I mean, I would say specifically, right? Let's go with the most obvious, well, NFTs, right? The whole like how are NFTs traded? It's like, well, people flex with them and then people speculate with them and then there's this roadmap and then people look at like fonts and founders to figure out whether or not they're going to rug. Like that shouldn't even be a thing. The whole rugging concept. That the fact that that's endemic to a whole ecosystem worth hundreds of billions of dollars is kind of ridiculous. I own a bunch of NFTs and whatever. It's fine, but I think it's the fact that it's like, hey, and if any of you are at these NFT events, I was just at NFT NYC. It's like, okay, you give people money and they make all these empty promises, and the thought is that maybe they won't steal my money. And then other people will think this NFT is worth more than I bought it for. And if I could get them to think that, then I can make money. But I also want this to flex. It's like, well, most people that want things to flex with aren't trying to speculate, right? If I own a nice watch and I wear it, I'm not trying to sell it. So that dynamic is weird. But ERC 721 tokens, sure, there's applications, right? We're working with, some real people with real IP, like the Ford Modeling Agency, like the largest condo developer in New York, like a huge publisher that has all the YA titles you may have heard of. Like we're working with people with real IP to deliver that into the NFT space. And that's what we call, I'm trying to coin the term NFT 2.0 because that's real. So instead of selling the menu, it's time for NFTs to sell the meal. But do ERC 721 tokens work? Yeah. Yeah, right. So blockchain payments as well. Like, yes, payment rails work, but it's like how you use it for. How are you using it, what you're using it for. And it's a lot of crypto is just basically solutions that are built without a problem in some ways. Like what problem are you solving, right? If your problem is like, hey, how can I get like more people to borrow money so that they can then go speculate into the same system where APYs are from emissions and only work when prices go up, then you're lending to the same echo chamber. And so what problems are you really solving in the real world with this blockchain? That said, any new technology, you will need to test it out. You have to experiment with it to make sure the infrastructure is robust. So it's better that we do this inside the ecosystem than we go and do this with like auto loans and credit card loans and mortgages and where you can really like screw up the lower layers of Maslow's pyramid. Um, there's value to this and testing out the ecosystem, being high risk takers to help the ecosystem grow. I could see why you would be compensated for that with the APYs. But I do think crypto needs to grow up and move into a place where you're solving real problems in the real world.
Yeah, one point I want to touch on there that I think is really interesting that you just said was the NFT 2.0. Like the current NFT model is they put up a roadmap, you buy the little JPEG, and then you're promised something in the future. And that's one of the reasons that why there's so much speculation because you're buying something that doesn't exist yet. If you're buying into something that exists, it's not speculation, you're actually purchasing a product. So I wonder, like, where you see like NFTs moving forward, getting past this JPEG stage that like we just saw.
I mean, I think NFTs are going to see more utility, memberships, like real stuff, right? But I think the trouble there is that the ecosystem is not like the NFT native ecosystem isn't there yet. Um, and there's a set of behaviors that have been heavily rewarded that simply don't function in the real world or simply don't function in a down market. And so when people like when people say like here's an NFT, I'm gonna take my NFT and that I created and use this picture and get enough people to buy it, and then I'm gonna use this IP and make swag and use this IP to make music and movies and stuff like that. I'm like you realize that each one of those things are industry verticals, right? If you're trying to become a clothing designer, you're going to eventually have to worry about things like supply chain, distribution, pricing, retail, like, ethical production. Like there's a lot of things you have to, worry about. Same with music, same with art, same with like every one of those things is a business that you're not equipped to handle. And when I hear people say, I'm going to take my NFT and this NFT is going to be the next Disneyland, uh, Disneyland was not built by a community of contributors. Like that's just not how it was built. So um, I think NFT needs to grow up, and we're hoping to usher it that way.
Right. So when you talk about collaborating with or investing in projects, and you mentioned a couple of things you're doing, practically, how does this work? Like, is there this LLC that you get equity with, or is it more like a DAO where you put some money in and then you get a percentage of tokens? How does that work, and how do you invest in these
hmm
blockchain groups or organizations?
You're talking about from the castle sale side, from our venture side.
Yeah, yeah, exactly. Yeah.
Yeah, and so we take equity. Usually it's a safe because we're usually very early, or we take SAFs. So for future tokens. And usually like we invest into, if it's equity, we invest into it, or like an entity, some kind of corporation, C corp or LLC, and we are the plan is to then at the next price round we would have a valuation where we would get our equity. um, and then for SAF it's the same concept but with tokens, and so we invest in both equities and tokens, but we're not a DAO, we're an actual entity, legal entity.
I saw on your website you have a lot of different investments, including Cosmos, Optimism, all these great projects. Is there any area or investment you're particularly excited about?
I mean, I think a lot of people will say this these days, but I really like the concept of infrastructure and touch points with the real world. If anybody out there is developing real world asset on ramps, talk to me. I'd love to learn more. We're talking to a few startups that are looking at user persona tracking and community dashboard. I think that's cool. Like payment systems, like abstractions for credit cards that spin up NFT ecosystems, or other like um, ecosystems. I think that's interesting. I would love to look at projects that track interactions among the smart contracts. Um, we're also like investors in like things that are just like BDRIA on ramps into crypto, or the Bloomberg terminals of crypto. I like that. We've invested in a layer zero protocol. That's essentially like a multi-chain oracle of time events. So like if what I don't want to see is another yield aggregator. I'm not interested in DeFi plays that are just like another Ohm fork, or like anything that is wholly endogenous to DeFi. I am not interested in. I want to see you solving a real problem. And if you're tell if and then the whole like DAO tooling, you better come correct because there's so many of these things out there.
When you're looking at projects, like what what do you look at to assess whether this project is worth collaborating with and worth investing? And I think you mentioned that you want to see people solve a real problem. How do you begin to even understand whether they are solving a real problem? Do you look at the team? Do you look at how what they've done so far on their roadmap, and maybe how that differs from investing in a typical Web2 startup?
Yeah, I mean, like because we advise and have invested in quite a few things from DeFi to NFTs to, to Web 2.5 to Web 3. Um, like we've experienced our share of pain points. And so a lot of times like there's going to be blind spots. I don't cover all of that, but a lot of times it's like when people say like this is solving for this problem X, Y, and Z. If it's not a problem that we've personally experienced, or among our network and friends, if it's not something that makes sense to them, then it's like, yeah, it's kind of shoehorning into a problem. Um, and so it needs to be very obvious, and it needs to be something like, oh my God, I would pay for that. And the number of times I've said that, like, I love those moments. Like, yes, please. Like, I will use you. I will introduce you to all my network. I will plug you into our projects. Like, please just make your product. That's the best. Um, and then, like, we have a very clear no asshole rule. Like, I don't care how awesome your product is if the founders are just, you know, total, giga chats. Kid. I can't. Life's too short, like if you're a fox more than a hedgehog, meaning if all you're doing is on Twitter, like shilling and partying and try to be a part of the scene and all that stuff and not building, really hard to get behind, right? Like teams need to have a technical founder, teams need to have at least a technical co-founder. Um, there needs to be some level of humility, and there needs to be some level of like value alignment. So we want to see a lot of integrity and hunger and humility in the founding team. Um, yeah, I think that's very important to us.
Yeah, that sounds like some super important, aspects for a crypto startup. One common similarity people like to point to is look at internet adoption versus blockchain adoption and say, oh, it's pretty similar. It's going to be like as used as the internet one day. Where do you see blockchain technology in the future? That's also very broad.
Yeah, it's very broad, right? I think anything that can be tokenized will be tokenized, but I also think that without clear regulation, like it's not going to happen. Um, and I think without clear antitrust and competitive dynamics, it's going to be very hard to happen. Um, I also like I think right now there's a zeitgeist of wanting to like there's an actual clear disdain. I won't go so far as hatred, but there's a disdain for TradFi and all things real world, right? Yeah, good luck. That's not going to work. If crypto wants to enfranchise people, if crypto wants to drive wide adoption, there needs to be a willingness to essentially enfranchise and open up and invite people to participate instead of like, oh, you can't figure this out yourself. You don't have thousands of dollars to play with and speculate with. Well, F you because that's what the system is. That's a lot of the attitude that I really can't stand. Um, I think there needs to be a lot of people who are dedicating themselves to education, um, and also like um, creating like I would say soft on ramps, which is why I think NFTs are interesting. It's a way of getting into crypto without diving deep into DeFi. Um, it allows you to like start participating, like, oh, what is Discord, right? What is a wallet? What is Ethereum? So I actually think NFTs are going to be a really interesting uh, ramp for a lot of people. But I'm overall very bullish.
Yeah, that makes a lot of sense. That's all the questions we have for you today. Thank you so much for joining us. If there's anything else you wanna tell us, any closing remarks, feel free. Otherwise, we'll close it out here.
Yeah, sounds good. I think feel free to reach out if I could be helpful. Always interested in seeing what people are working on. So definitely like contact me. I guess my email is lili@qis.capital. So if you want to talk, you want to reach out with some ideas, always happy to touch base.
Awesome, thank you. This has been the Exploring the Blockchain podcast. We'll see you next week.
Thanks.